You're tuned in to the Tools of the Trade podcast.
Ooh, what's up, everybody? How you doing out there? My name is Colin, and I am your host of this podcast, Tools of the Trade, where I interview construction leaders, extract their tools, share their stories, all in an attempt to give the industry a voice. This is the second episode of the two-part series, Bonding and Insurance, with Scott Dekanich, the CEO of Netsurance Canada. Head on over to netsurance.ca for more information. I'm going to keep the intro short. This is an independent episode, meaning you do not need to listen to the bonding episode to listen to this insurance episode. But I do recommend you check it out. There is a lot of good information there if you're unclear about bonding and how it pertains to the construction industry. So episode 6, the first episode prior to this, is all about bonding. This one is all about insurance and risk mitigation. So keep it locked to this episode. And if you haven't yet checked out the bonding episode, I highly recommend it. These are two very important subjects as it relates to your business and to ensure that your risks are mitigated and that you know what you're talking about when people start bringing up various terms as it relates to those two industries. So I am going to just go ahead and get right into it. This is episode number 2, or episode number 7, I should say, part 2 of this two-part series with founder and CEO of Netsurance Canada, Scott Dekanich. Scotty, thanks for coming on for this part 2. And guys, this is the second shot. As this is a new podcast, it's taken me a little bit of figuring out with audio recording. And believe it or not, we had some rock solid content, about 30 minutes worth, about a week ago, and I didn't hit the record button. So today we are officially recording. I've got my good buddy, best friend, Scott back, Scott Dekanich of Netsurance. And last part of this two-part series was all about bonding. And you guys can go check that one out. Episode number 6. This is episode number 7. And we're going to get into everything related to insuring a contracting company and mitigating risk and all that good stuff. So Scotty, thanks for coming on again.
Hey, no problem. Thanks for having me.
Yeah, of course. So let's get into it. The best place to really start, in my opinion, is just simply what needs to happen when somebody is starting up a company and is thinking about the things that they need to get in place besides registering the business. One of the first things is insuring. So walk me through commercial general liability and what people need when they're starting out and the things they need to think about when getting insurance.
Yeah, sure thing. So you're starting your contracting business, whether you're an electrician, landscaper, plumbing and heating contractor, any sort of the works. I'm sure somebody's mentioned to you along the way, or to get a line of credit or something somewhere, or even a project, your first project, somebody said, can I have evidence of your insurance? Or do you have insurance? And there's quite a few different products that we can get into with respect to contractor insurance. But the primary one and the most important one that I would say every contractor should start looking at is commercial general liability, like you had mentioned. And this covers third-party property damage or bodily injury as a part of your operations. So what does that mean exactly? It means that if you are on a job site and you damage someone else's property, or if someone's harmed as a result of your business operations, that you have a liability policy that will cover any potential payouts from the loss, whether that's to recover the third-party property. And when I say third party, that just means it's not possessed by your business. It's property that is someone else's. We can get into property insurance shortly for your business and what you own as a contractor. But that's what it's referring to. So if somebody's on a job site, caused a mistake, that results in damage to third-party property or harming someone, then your liability policy will, any claim payouts for the loss, as well as court litigations and defense costs. And typical limits that we see for a contractor are usually 2 million is kind of on the lower side of things. And you can even go as low as 1, but 2 million's industry standard in most sectors of contracting. Whereas when you get into plumbing and things like that, 5 million or even higher is more common for coverages, because with water losses, for example, you can start racking up bills pretty quickly, especially if you're working on multi-level structures and things like that. But that's kind of the first form of insurance that everybody should look at. And as a contractor, your liability is your largest portion of risk. Your tools and things like that, those are important, but liability is the most important. And if you're performing actual physical labor and physical work, commercial general liability is the coverage for you.
Yeah, and just you mentioned a couple things in there that I kind of wanted to deviate down those paths just for a second. The first thing was asking subs for insurance. If a contractor is hiring a sub trade, I can say back when I had my company, and even to this day, in some of the roles that I've been involved in where I'm working with general contractors, I'd say less than 5% of the time I'm asked for additional insured on my insurance policy. It just, people never seem to ask for that. And also to loop right into that, what from my experience, and I'm going to be super generalized here, the best contractors that I've ever had the pleasure of working with in my career have A, asked for additional insured on the insurance policy, and B, have required minimum 5 million liability. 2 was the standard that I've always had. 5 was what I was asked for by the guys that were serious, that were taking on better projects, and also they were asking for that certificate. So yeah, talk to me about certificates, because that's one thing that I think a lot of general contractors miss out when dealing with subtrades.
Yeah, sure. So let's clear up first what that means, because some listeners might not know what a certificate of insurance is, or maybe they've heard the term, but they weren't exactly certain. So when you purchase an insurance policy, and let's just stick with the example that we've chatted about up till this point, which is commercial general liability. So you purchase a commercial general liability policy, which is an annual insurance policy. So we have it from January 1st, 2019 to January 1st, 2020 for the period that we're in right now, for example. Policy documents are very long. They could be up to 100 pages or maybe even longer, that go into details about what's covered, what isn't, potential exclusions, claim situations, things like that. But, general contractors that are hiring subs, they want to obtain evidence that their sub has insurance, but they don't want to necessarily go through their policy. And it's not even necessarily some of the information in that policy might not be the general's business to know about the sub's insurance policy. However, what it is, their responsibility and their right to know if they're covered and what type of coverage they do have in place. So they'll ask for a one-pager called a certificate of insurance, which is just an outline, of all the quick points, who the named insured is, which will be the subcontractor's business title, whether that's a sole proprietorship or an incorporated business, what types of coverage they have in place, when they're in force from and until, and it'll also typically outline a few specifics of coverage and potential exclusions and things like that. But the certificate of insurance is a one-page document to quickly view what insurance a contractor has in place, or any sort of a commercial or business policy.
So sorry to interrupt, but if a contractor asks you for your certificate and you're giving them proof, here's the proof that I'm insured, that my company has insurance to operate on your job. What is naming the contractor additional insured do versus not naming them at all? You're just on a job. Nobody asked for anything from you. You haven't named anybody additional insured. Does that affect the level of insurance on the project?
Not having them as additional insured, so When you issue when you purchase a policy, in general, you'll typically get a generic certificate of insurance along with your policy. That is that one pager that gives a quick outline of what the coverage is. Now, on top of that, it's common and it's proper risk mitigation practice for anybody that's working with subs to get themselves named as additional insured on the subcontractor's policy with respect to the work that they're going to be doing for them on any specific project, or even if it's some sort of contract that continues throughout the year. That additional insured statement, so if it's ABC General Contracting is hiring 123 Electrical Limited, ABC Contracting wants a certificate from 123 Electric that says that ABC General Contractor is an additional insured. And what that will do is if the electrician on the project causes some sort of damage, or there's any sort of a loss even later on with completed operations, products and completed operations, which is part of a commercial general liability policy. That's just one of the forms of coverage included in that. So that would be later after a project is completed, for example, and an issue with the work done on the electrical side was found out after, for example. Well, the person that had that work done and hired the general contractor to perform that work doesn't even necessarily know that there was a different company in the electrical space that was on site performing work. So they would come after the general contractor for whatever losses or damages were caused from the electrical work there. They don't even know that 123 Electrical was on site. And what the additional insured does is ensures that that electrician's policy will step in to cover any of the court litigation or costs to repair the damages for whatever the potential loss was for the general contractor, if it was the responsibility of the electrician in the first place.
Gotcha.
So that's what additional insured means at the end of the day. The general contractor still needs insurance. Any work that he's performing is still important for him, but for his subcontractors, and that's why it's so important for them to get a certificate of insurance, at least of evidence of insurance, but definitely preferably have whomever they're hiring as a sub add them as an additional insured. That's why it's so important, just because in the event of a loss, there's no ifs, ands, or buts. If that was their portion of the work, we already know that the policy is stepping in to cover off the general there that hired on the sub.
Gotcha. So we did jump a little bit ahead there if we're trying to go somewhat in chronological order of steps somebody needs to take. So let's say I go out and I want to start a company, and then the first thing I need to do is find the guy or the girl or the company that is going to provide me with insurance. So where do you recommend somebody looks to find that person? And what sorts of questions or things should they look out for when soliciting somebody for insurance?
Yeah, sure. So as a contractor, when you are looking at insurance for the first time, I'd recommend this to most people. If you know someone in the insurance industry, you're confident is a competent person and has your best interests in mind, that's probably the first place to go, to be honest. I think if you can just have a casual chat with them initially and let them know what your goals are with your business and what the type of work that you're going to be doing, they'll have a good idea of what to look for in terms of an insurance package, what markets to use, and things like that to obtain a package that will make sense for your business at a reasonable price. But if you're looking for more of a self-serve option or to buy it online, I know a lot of people expect that it's something that they can find online these days, which you definitely can find all sorts of insurance businesses advertising online. But we do have a contractor insurance program for various different types of industries online at netsurance.ca. So I'm sure we'll put the link in the description of the podcast here. But You can go on there, select your field of business. It goes through revenues, employees, types of work that you're going to be doing, and you can get an auto quote in your web browser and even purchase the policy online if you'd like. And some of the premiums are really reasonable. I've seen for electrical contractors, for example, some new ones starting up, I've seen them even walk away with policies for under $600 through our contractor program on netsurance.ca. So that's another place that you could look. But really, if you can sit down with someone that's a friend and cares about your best interests, it's always good to have a chat with them. So that's an option. But a simple Google search for the type of business that you're looking for or that you're starting and insurance related to that always helps as well. Yeah, that's where I'd recommend starting. So,
and I think this ties directly into bonding in a small way if that company offers bonding as well. I remember that we talked about the track record that a person needs to obtain bonding, and that if you have a personal relationship or a friendly relationship with somebody that knows your character, that's going to assist in the future potentially if you need bonding, correct?
Yeah, it would. And again, it also depends on in the bonding episode, we had a chat about the few different types of bonding, including the license bonds or commercial bonds versus contract bonding or contract surety. And if you're looking for contract surety in the future, relationship and history in the business and as a person is definitely an important aspect of getting a bond facility in place. So.
Perfect. And one of the things you mentioned was how cheap you've seen electrical policies come up for first-time contractors recently. Which one is the most expensive? Which trade or which type of construction industry has the highest insurance rate?
Recently, the two that stand out to me for contractors are plumbing contractors and roofing contractors. Those rates industry-wide for insurance are quite high. And even if your business, whether you're a new business or you're fairly established, and even if you had a good claims history, which means no claims or a small claim or something like that, the losses industry-wide increase the rates as a whole that everybody pays within that industry. And those are the ones on the more expensive end these days. Roofing contractors, which are a little hard to find underwriters that are willing to write roofing risks as well these days. So that plays into it as well. When there's less markets offering the product, the rates in general have more room to go up because it's less competitive. But plumbing, as we mentioned before, the potential for liability losses on high rises, even it's up there. If you cause a loss, or if there's a leak on the 19th floor, how many floors below are damaged? That's all third-party property that's being damaged. $5 million may not even be enough to satisfy that type of coverage. But questions in that insurance applications for different types of contractor coverage get into what type of work you're going to be doing and potential height restrictions on buildings, high rises versus low rises, residential versus commercial, even getting into industrial work, things like that. These are questions that are typically asked on an insurance questionnaire when you're looking at coverage for the first time, and that will indicate where rates are as well.
And there's two things that come to mind here. Let's say you mentioned 5 million might not even be enough. What happens if your claim exceeds the amount that your liability insurance covers you for? Say it ends up being 6 million. Does that simply mean up to 5 million is covered through your insurance policy and the other million has to come out of pocket?
Yeah, that would be the situation that a contractor would be in if they caused a loss in excess of their liability limit. Their insurance policy still would cover up to the limit stated, but that may not be enough. When we're talking about a claim in excess of $5 million, though, that's a pretty serious claim. And if you're getting into high-rise plumbing, for example, which is where loss potentials for that size exist, at that point, you can review your risk program And you're going to be a substantially sized business at that point that you can increase your liability limit to 10 million, for example. Or I know some of the larger contractors even go up to 25 million for their liability limits. But as a starting out contractor, I think the risks where a claim could occur in excess of 2 or 5 million, it's pretty few and far between. If they exist at all, it would be pretty tough to cause a loss of that size, I think.
I've seen one instance where I was in a high rise doing a renovation with a general contractor, and I can't remember which subtrade caused the damage, but somebody was carrying something up into the unit and knocked the sprinkler head off and set the sprinklers off in the building. And that caused an extreme amount of water damage. Is that type of thing covered under the general liability policy?
Yeah, that's a perfect example of, if you're not a plumber, you could still potentially cause a water loss by a mistake on site. That could happen for sure. And yes, that is something that your liability policy would cover.
So watch your sprinkler heads, boys or girls, when you're out there. Don't hit them off or don't set them off, because even though I think the example you were saying was if you're building a high rise, if you're even renovating and you've got a small sink or toilet to install, I have seen the flood potential of buildings when people are doing renovations, and not just through sprinkler heads. I've seen multi-floor leak damages and things like that. And I can't stress that enough. It's so easy to just knock something off or have water damage going from floor to floor. I've even seen it in the building that I live in now with people that have had bad dishwasher installs, and the drain hose comes off, and next thing you know, you got 4 floors down, everybody's getting damage.
Yeah, definitely.
So we talked about commercial general liability, which is pretty much what everybody needs as a starting point. But one of the things that we talked about was an example you shared with me of somebody that thought that the commercial general liability policy was all that they needed for their business. One, in fact, that wasn't correct. So I think you know where I'm going with E&O or professional liability. So could you tie that example into the definition and explain a bit more about the E&O and professional liability?
Yeah, first off, we'll clear up a common misunderstanding potentially for contractors on what that means: professional liability, errors and omissions, or E&O. It's all the same thing. First off, so professional, whether somebody's referencing professional liability or they're calling it errors and omissions insurance or E&O, that's all the same aspect of coverage, and it's referencing design work, consulting, or professional services outside of actual physical work being performed. So really, if you're even designing small lighting systems and you're not following an engineer's plans, for example, it would be important to have errors and omissions or professional liability coverage. And that's something that you can ask your broker about that's going to be helping you purchase your insurance. Through our contractor program, you can also select if that's something that you'd like to include as a part of your package policy, if it's relevant to you. But for most contractors, design work isn't really on the slate for them. So although there's times when contractors don't think that they need professional liability, but they actually do. And the one that we were chatting about in the past was an electrical contractor who was in business for a few years already. He had a commercial general liability policy. He did $500,000 in revenues on an annual basis, and his premium was pretty reasonable, $1,000 or $2,000, something in that range. And but 70% of his work was coming from programming logic controllers on industrial assembly lines. And I think you had some you could probably touch on that point a little bit more with what that actually entails as an electrician. But the client wasn't convinced that work of programming the controllers would actually not be covered under his commercial general liability and that he needed professional liability. And, when he found out he had to pay an excess $900 or whatever the additional premium was for including professional liability as a portion of his coverage, he just basically turned a blind eye and wasn't interested in obtaining it. But when you have a claim, and you find out that the coverage that you purchase year after year doesn't actually include what the claim was for, that's not a good situation to find yourself in. So it's important to know what type of work you're going to be performing throughout the year and fully disclose that to your insurance rep that's going to be assisting you.
So obviously, if anybody is getting insurance for the first time, they need to ask their individual broker these questions. And what we say here is advice based on your experience. But I have a couple things that I want to clear up because something just popped into mind. When you were explaining a PLC, for those listening that don't understand what that type of work is, basically it's a big cabinet with inputs and outputs. And if you're talking about an assembly line, let's say when arm B picks up a widget off of a conveyor belt and drops it into a box, that may need to initiate another sequence. So basically, you have to design the way that machinery or whatever it is going to be sequenced. But one of the things that now I'm getting confused about is when I had my company, it's quite common for an electrician to quote a job based, or a plumber. Actually, I'd say most of the trades, and let's use a residential home for an example, to be given a blank set of architectural drawings. So you're given the exterior elevations, you're given the top-down floor plan, and that's it. And then usually your general contractor says, give me a price to wire or plumb this to code, and then give me a shopping list of extra items that we can potentially add or delete to this contract. So you are essentially designing the house to code so that you and your team can wire or plumb it correctly. And then you're giving an add or a delete price for, let's say, an extra pot LED or a dimmer or a switch or a plug. And then when you get to site, it's typical that you're either working directly with the contractor, the client, or the designer. And at that point, you're looking up at an empty ceiling, say, and they're going to say, okay, how many lights do you think we need to adequately light this place? So there's a few calculations you can run to figure out the proper amount of light that you need in a kitchen versus a bathroom versus a rec room or something like that. But at the end of the day, usually it's the electrician is the one that is looking up at the ceiling and saying, I would put 8 here. And sometimes that is a crude design on the back of a napkin or a piece of cardboard, or it's a drawing on a stud or a wall, and you're there with a designer. So would something like that be considered design work? Because technically, I think I'd say, let's say 30% of the quotes that I have presented in my career for single family homes or custom homes did not include any sort of design or reflected ceiling plan. It was literally an empty set. So I'm kind of designing, but you're designing to come up with a number that it's going to take to wire the house. So where do you draw the line between design and just doing your job to code?
Sure. So if you're following Safety Act code standards, you're most likely not going to be running into issues with liability claims on that side of things for minor design work, for example. The number of lights that are going to be included in a room, things like that. When you're looking at the potential for loss in a situation like this, I would still say that the most risk is in the actual implementation of the electrical work. If there was a problem with wiring or something along those lines, just because you said that there has to be 8 lights in that room, and a loss occurs, it doesn't mean that your decision to put 8 lights in the room is the reason for the loss in that situation. So, minor back and forth like that with a general and a designer on site or in the quoting process, I don't think that would generally be considered design work. And the situation that you were mentioning there, if that's the extent of decision making on a site that you're making, I don't think that a professional liability policy would necessarily be required for that contractor. Commercial general liability is still the primary coverage in that sense. But I get your point that there's a fine line for when design work starts and stops. It also depends on how frequently you're doing it, because if that's a main portion of your business and a revenue stream for you, then there's more exposure there. So
yeah, and I've seen people advertise it too. I've definitely advertised it, and I've seen, typically from an electrical contracting standpoint, people think that it is a good differentiator to say that they can do lighting design, and then they promote the hell out of it on their social media and their websites, and basically they're downloading some sort of Bluebeam or PlanSwift, loading up the drawings, dropping in little points on the drawings and saying, here's my lighting layout, here's my design for your lighting system, here is my design for whatever else is going in there. So I guess if you're having minor back and forth on the site, we may not need to worry about it. But if you're explicitly mentioning that on your marketing material and on your website, and then let's say you have an instance where you overload a circuit, or you have something wrong, something happens that's maybe a flaw in the design, and it could be with lighting control, maybe something turns on that shouldn't and it fries something or whatever, then at that point, because you've explicitly mentioned that that's what you do, then you could be in trouble.
yes, I'd say that's a good point. Again, design, the word design and what comes along with it could mean different things to different people. So that's something else to consider. But yes, the scenario that you're mentioning, if you're advertising and really designing a lighting system for someone where there is the potential for flaws and it would be your responsibility if something went wrong, it's a good idea to include E&O or professional liability as part of your insurance package. And sometimes it's not necessarily an over-the-top form of coverage. Cost wise, there can be reasonable premiums depending on your company size for design work. And keep in mind that if you caused, or if there was an error in some minor tweaks that you're making to number of lights or something along those lines, and a light doesn't turn on where it should have, or it blows all the time where it should have, it sounds more like it's your responsibility to come and correct the flaw rather than make a liability claim under it.
Absolutely.
So that's something else to keep in mind.
Absolutely. And again, I'll just state it again for the record, ask your individual broker what they think and chat with them before you proceed. And obviously check out Netsurance if you need an online answer. And I'm sure that there is a bit more information, but guys, just check out Netsurance online. And if you're not online, check out or ask your individual broker what they recommend with any of this stuff that we're talking about, for sure.
Yeah, there's a decent amount of information at netsurance.ca if people want to research different forms of coverage and learn about different terminologies and things like that for themselves. But the most important thing is just to fully disclose your operations when you're obtaining insurance. Don't think, oh, I do this, but it might be expensive because it seems risky, so I don't want to disclose it. That's exactly when you should disclose it. Because there's no point in buying insurance if it's not even going to cover you, just to say that you have insurance.
Yep. So another thing that I want to chat about was course of construction. When somebody is in the midst of building something, talk to me about course of construction, outline the definition, who needs it, and why it's important.
Yeah, why don't we start on property coverage in general now, because I don't think that we've gotten into that. We've mentioned third-party property, which would be covered under your liability. That's property owned by someone else. But how about the things that belong to you or are at least in your care, custody, and control for the time being, like a course of construction policy when you're building structure. But let's just touch on property insurance in general. So when you're looking at an insurance package, and so you decide you need commercial general liability, that's your most important form of coverage. You're not doing any design or consulting or any other professional work other than the physical labor of your trade. So you decide just commercial general liabilities for you. How about your tools? Do you have any large pieces of equipment, a small set of tools, anything that you use in your course of business, even your laptop? Things that can be considered something that you utilize for your business. These can all be included under your insurance package. And most contractors find that when they're starting out, a small limit for tools in the $5,000 to $10,000 range is typically adequate. Now, I don't think that we've brought up deductibles yet, but that's something else that we can chat about now because it makes more sense. You know, if you're causing a liability claim and you have to pay your $1,000 deductible or even a $5,000 deductible, which is the amount that you need to pay in order to receive the coverage that you had purchased that is part of your policy, when a claim occurs, that's not a big $1,000, and then you get $200,000 in coverage for a large loss, for example, on the liability side. That's a no-brainer. But on the tools side, you know, it matters for what your deductible is going to be and what your loss potential is. If you only have $5,000 in tools and you and your business partner each hold $2,500 in a locked box that's locked in the in your truck, for example, and one of your trucks gets broken into and stolen, but your deductible is $1,000 or even $2,500, for example. Well, it wasn't even really worth it to buy the insurance in the first place, was it? Because you're going to have to pay that amount to receive payment for a claim for those tools. So that's something to consider. And if you have $5,000 in tools, but you decide on a $500 deductible, your premium, which is the amount you pay for the annual coverage, might be a little bit more expensive, but it could be worth it if you end up getting your tools stolen or some other form of loss renders them that you can't use them anymore. So
can I interrupt you there and ask a question? I know that when you get auto insurance, they typically ask if you need artisan insurance on that, which means it covers your tools in your vehicle.
Yeah, sure. So that's something that varies province by province, unfortunately. And if people are listening in other countries, auto insurance in general is something that varies greatly even within countries, depending on the area that you're in. I've, to this point, steered clear of it for the reason in BC licensing, we basically have a monopoly here. And for those in BC, they definitely know ICBC runs the show for auto coverage out here. And that's something else to consider. You don't want to double dip on coverage. If you're getting it covered through your auto policy, for example, then it might not be worth it to purchase on your commercial policy. But keep in mind that this artisan coverage that they're offering on your auto insurance, where do the limits of that coverage stop? Where what if you take them out of your truck and you have them on site and they're locked on site, but somebody breaks into a construction site in the night, or it goes up in flames or some other form of loss, and all your tools are now gone, but the artisan coverage that was included in your auto policy doesn't cover tools unless they're in your vehicle. So that's something to consider. I'm not familiar with that specific form of coverage. If that's something that in the Ontario marketplace, I'm not sure, to be honest. But in general, it sounds like with a commercial policy, it's probably easiest to include it on there, just when you're purchasing your commercial general liability or your professional liability policy, to include your tools with that form of coverage. That way you can have them covered not just on site, but in your vehicle as well. You should always keep in mind that if you left your vehicle unlocked and somebody walked up and opened the door and took your tools and there's no visible sign of entry, well, it's going to be tough to make a claim on that. So there will often be verbiage in an insurance contract for property coverage that shows visible signs of entry for something like that if it's in your vehicle. But yeah, so that's something important to consider when you're looking at tools or property coverage, for sure.
So if you forget to lock your car and somebody takes your tools, you need to smash the window.
Hey, that's insurance fraud. I won't support that, but the idea is you need to be taking adequate steps to prevent loss on any insurance contract. If you're just, oh, who cares? I have insurance, so I'll just leave it. That's what the contract on the insurance policy is trying to prevent people from not caring if their tools are stolen, because they're going to be put into the same economic situation that they were in prior to the loss, which is the whole idea behind insurance. But we still want people to be careful and considerate of how they would be storing their property.
Right. So before we jump into course of construction, I want to just take a step back and dive quickly into deductibles, because this is one thing that confuses me a little bit. And I'm sure if I'm confused, that somebody else out there listening is confused as well. The difference between deductible amounts, how that affects the cost of your annual insurance policy, and what it means, what a deductible is, and when it comes into play, and how you pay it.
Sure. When we're talking about deductibles, it also brings up the topic and cost of your insurance. It brings up the topic of how a premium is determined in general on your insurance policy.
Okay.
And I'll briefly break that down as well. What are things to consider when you're purchasing coverage for how much your insurance package will cost? The type of industry that you're in, and we talked about rates differing among the different industries. That's something that's important for sure. That's going to base your rate for coverage. How much revenues you have on an annual basis. And for new contractors, this is going to be something that they need to take a guess at. In general, most of the time, I see new contractors stating between $50,000 and $100,000 in revenues in their first year. If they're a one-man show, that's what they go for. After that, within the industry that you're in, the different types of works that you're going to be doing, whether it's split on residential versus commercial, industrial potential, things like that. We get down to deductibles. Now, the lower a deductible is, the lowest that we see in commercial policies is in the $500 range. And the higher end, it can go up to 5,000, 10,000, even up to a percentage of the loss, depending on for earthquake coverage, for example, it's common to, or flood, it's common to ask for a percentage of the loss is the deductible amount. So if the deductible is 10%, that means that 10% of whatever the amount lost is what you as a contractor are going to have to pay to the insurance company to receive the full amount. That's the portion of the self-insured loss, basically. And why a deductible exists, it's factored into calculations that insurance companies do for what the loss potentials are, and it's a bit of money back so that they're not absorbing the whole cost of a loss, but it's also to prevent loss fraud. So if you're going to make a claim, but that you're going to have to pay a certain amount to receive the claimed amount from your insurance company, that's a bit of a deterrent to just make random claims for whatever. But so yeah, deductibles, if it's $500, then your annual premium on your policy are going to be a little bit higher. If you put it up to 5,000, then you're going to pay a little less on the annual amount. But then when a loss occurs, that's the amount that you will have to absorb in order to receive a payout. So that's also there to prevent small losses from being claimed. If you lose $500 in tools and your tool deductible is $500, well, you can't make an insurance claim, unfortunately. So in that, if somebody has under $1,000 in tools, from my perspective, I would just say leave it uninsured or self-insure it. Basically, you just know that if you lose your tools, that you're going to have to purchase them again. So you need adequate funds to cover off that risk. So yeah, deductibles in general, though, it doesn't change your premium by that much. So I would say most of the time, just choose the lower end deductible, because in the event of a loss, you'll be happy that you did.
And if you have multiple claims for, let's use the example, tool loss, does that negatively impact your insurance premium at all?
If you have multiple claims, does it negatively affect your insurance premium?
Yeah, like say you live or you work in an area that's a little dangerous. Maybe you have an office in an industrial park, but there's a lot of shady people around and you get broken into a couple times a year and you keep losing large amounts of stuff.
It does. The more claims that are on your policy, depending on the insurer, your premium will change slightly. If it's a couple small losses, rather than increasing your premium by a bunch to try to make the risk and assessed value of premium that you pay annually fair to the rest of the industry, the insurer might try to help you with risk mitigation in general. What can we do to prevent this in the future? They might say, your policy now only you need to put an alarm in your place for us to continue coverage. That could be something that comes up if you're having multiple losses, for example.
Gotcha.
And if but on the flip side, that's definitely something that's taken into consideration by insurers when they're determining your premium, how many losses you've had in the past. And that's a question that comes up. That's something that I didn't mention on what determines a premium for when you're purchasing coverage. Not only your industry loss history, but specifically your loss history.
Right. And I was going to ask that. So if plumbers had a bad few years, that's going to increase policy rates, as well as your individual losses are going to increase increase your rate. But as a whole, every time you lose, you're negatively impacting the industry. So it's more macro than micro. It's both.
It is, but tool losses, that's not really something that's affecting industry-wide loss rates so much, because that's kind of small scale stuff compared to a $3.5 million liability claim payout. $10,000 in tools is a lot different than $3.5 million in a liability claim. That's going to affect an industry as a whole for insurance rates for any particular insurer, or just the collective data that's taken across the entire industry to determine what the cost of the insurance will be.
Cool. Yeah, got it.
So yeah, I think so. For property, we've talked about small tools. If you have larger equipment, obviously it's important to include that. You can do what we call scheduling it on your policy, which means if the tool's in excess of $1,000, say, any single one tool or piece of equipment, like if you're an excavator, for example, and you need to cover your excavation equipment, you include that on a policy as the make, model, year, and serial number, and what the value is to replace it. That's something that you don't just lump into a total amount of property coverage. Oh, I have $105,000 worth of tools and equipment, but $100,000 of it is this excavator. You would just you say you have $5,000 in tools and you have an excavator valued at $100,000. So that's a way to think of your risk. I think if you have tools in excess of $1,000, some insurers like to see tools in excess of $500 be scheduled. But any contractor listening can look in his own tool belt and what they own as a business or company and utilize in their daily operations. And I'm sure they know right away what the valuable pieces are and what the kind of minor sets of tools that are in their box are.
Yeah.
So, but if you're a larger contractor and you have a decent amount of equipment, you should keep a running schedule or list of all the equipment, what its value is, its year, make, model, serial number, all of that. Every year you should review it, make sure that it's accurate, and that will be provided to your insurance rep.
Awesome.
So that's on the property side, but why don't we touch on course of construction, because that's another form of property insurance that isn't an annual policy. All we've spoken about to this point is the annual renewal policies that you keep in place all the time. Course of construction coverage is something that's a form of property coverage which exists for the duration of a project. And that at its base level is property coverage for a structure and everything that's going into it, including the materials, while it's being built. So kind of a cut and dry example of when a course of construction policy is necessary is a general contractor is building a new home. From the time that they're starting the project, and I recommend that you put it in place as soon as the foundation's going down. There are some insurers, and we're able to do it too, if you put the foundation down and even got a starting on the frame, and you think, oh geez, we need to obtain property coverage. What if this house burns down when we're halfway done building it? You can still obtain coverage. So we can help with that. We love doing course of construction policies. Netsurance.ca, we have a pretty robust product that we can even put in place after you've started a project if you need to. But it's my recommendation, as soon as you're starting a construction project, a home is the easiest example that I'm thinking of. If something occurs and a loss happens while the project's underway and you have to start from scratch, there's coverage in place that are for all the materials and everything that it's cost to get the project to where it's at this point. That'll be paid out by the insurer. So that's a course of construction policy. You can also, it's common on civil contracts. It's typically required on civil contracts, and when I say that, that's road building, doing street lamp installations. I have an electrical contracting client that specializes in street lighting. So he'll do 400 street lights on a new road that was just built. And the municipality that it has tendered that project will require a course of construction policy to be in place to cover all of those street lamps while they're being installed. If they put street lamps up and a truck plows through 5 of them during the project, what happened to those street lamps? Now, the contractor is still responsible for having those. The municipality is going to say, well, we hired you to do this contract. Now a truck just plowed through 5 of them. I don't know, maybe that's not the best example. It could have been an adjacent road to another road, but a road that doesn't have street lighting yet probably wouldn't have trucks driving down it. But anything that happens to property while it is being implemented or built on a project site, that's what the course of construction policy covers. And again, we put it in place from the start date of the project through to completion until it is taken possession by the party that owns it in the end. So on a home, a general contractor is hired. They're responsible for the property until the client takes possession of the home again, which will be when it's all completed, at which point they would put home insurance on the new build, and the course of construction policy would be canceled, and or it would end the date that it was supposed to, hopefully, if the project was all on schedule. And that's where risk would transfer.
Now, we know we have a mutual friend that ran into this situation. What if you're a developer and your course of construction is over because the home's built, but you haven't sold it yet?
Yeah, so that's something that comes up with general contractors that could potentially be, they're in a bit of a development gig where they're buying land plots or buying old homes, demolishing the homes and building a new structure there on the same site and then selling it. Our friend and client that Colin's referring to, I think there was about a 4 to 5 month gap after they finished the home to when they had sold it. So until the last baseboard was put in, we had the course of construction policy in place. But as soon as the project was completed and there was no more contractors on site, we needed to put a vacant dwelling policy in place because there was nobody living in it, which, to be honest, is not nearly as robust coverage as a course of construction policy. But again, if it's not under construction, hence the name, you can't have course of construction insurance on it. So that's kind of the scenario with homes, for example. If a contractor finishes building a home, but they still own it and they want to sell it, until they do sell it and possession date occurs, they'll need to put another form of coverage in place. So if it is vacant and it's sitting completely vacant, that's the type of coverage that they would need, a vacant dwelling policy. But I'm sure whatever broker placed the course of construction policy for you will be able to help you with that should the time come as well.
Yeah. One of the things that seems to be a common thread when we have conversations about certain nuances of insuring is people's mindset or mentality that A, it's not going to happen to me, and B, it's only 2 months. Why am I going to spend money on this product? My insurance company is just trying to make money. They're offering me all this shit that I don't need. It's never going to happen to me. Screw it. I'm not going to do it. What do you have to say to people like that? Because the more and more that I talk to you about the ins and outs of the insurance industry, the more I realize that obviously if you find the right insurance broker, it's more about risk mitigation than it is about people's bottom line. Like, these products are there for a reason and they should be utilized.
Yeah. What do I say to someone who tries to avoid insurance? Well, it sounds like they're just a person that likes to take risks in the first place. If you built a home that cost you $1 million to construct, and there's a 2-month gap in the time that you completed coverage to when it's being sold, and you decide to not insure that risk, it's $1 million of your money on the line should something happen to the property, for example. If we're talking about, right now we're referring to course of construction coverage in general. But I would just say, if that's a risk that you're willing to take, then we don't tell you have to take it unless or that you have to mitigate the risk through insurance. Just be aware that there's a potential for loss there, and there's nobody to blame but yourself if something occurs that you wish you had an insurance policy in place that would cover that, unless there's some form of contract or some municipality law or a document that's legally binding you to have insurance coverage in place on a particular risk. Then it's to the discretion of the owner of the property or the owner of the business that's performing work that they don't want to obtain coverage. But most of the time, I'd say it's a no-brainer. Just if there's an insurance product available for it, purchase the coverage, review the risk, consider what the damages would be if you had that loss, and if the insurance was in place, then what would the cost be to you? And the example that I mentioned for tools, that's a perfect example where I'm an insurance broker or an insurance rep, and I'm actually saying, if you have $2,000 worth of tools, you might want to consider just not buying insurance for those tools. Just be really careful with them. But again, review the costs to your business, review the worst case loss scenario, and you can decide for yourself if you think it's worth it.
One of the things you said to me, and feel free to fact check this one because it's been a while since you brought up this example, but it blew my mind a bit. And it's not directly related to construction, but if anybody's in the industry and you're in some sort of management, leadership, or entrepreneurial role, you've probably been to a golf tournament, and that golf tournament's probably had a hole-in-one prize of some kind, maybe a car or a cash allowance, or like a check. That actually has insurance on it in case somebody actually gets the hole-in-one, correct?
Yep. That's definitely a type of insurance policy. And in fact, we offer it on netsurance.ca. You can get a free quote in your web browser and buy it online. But that's a fun form of insurance coverage. You go to a golf tournament, there's stipulations on a policy like this. There needs to be a certain yardage for men, a certain yardage for women. Professionals don't count. So if you're a professional golfer and you show up at the tournament and play the hole and you get a hole-in-one, you can't claim on the prize. There's stipulations to the coverage, but that's definitely a fun form of coverage, and it's one that it's pretty common in the construction industry. There's lots of golf events, and you'll often see those par threes sponsored by somebody, and they're offering a $10,000 to $50,000 prize to anybody that gets the hole-in-one. I will tell you that the insurers that offer that form of coverage, and something to keep in mind that I can't recall if we explained this in the last episode, but I don't want to see claims, but it's not a negative impact on my business when there are claims. If you purchased an insurance policy from me or through netsurance.ca and there's a claim, I want to see you paid out. I'm not the insurer, actually. So we arrange contracts between an insurer and the party looking for the coverage, and we ensure that you have adequate coverage from a competent insurance company. But I just wanted to clarify that I'm not trying to avoid claims as your broker or the rep that assisted you in purchasing the coverage. I'm aligning you with an underwriter that provides that coverage, which is frequently, depending on the type of business, requirement in Canada. But sorry, I got sidetracked because I just wanted to clear that up. Hole-in-one insurance is the insurers, they make a lot of money on it. I wanted to say that. The amount of people that get a hole-in-one, it's not very frequent. I've been to probably 30 plus tournaments with these hole-in-one policies or multiple holes with hole-in-one policies, and I've manned lots of holes as an insurance rep to see if anybody gets a hole-in-one. I still haven't seen one yet. So
yeah, the last golf tournament I was at, they had a par three. It was up on a hill, and all you had to do is hit the green, and you got this little leather business card holder, and I shanked it right into the little lake that they had on the left side. So not quite the hole-in-one prize, but still fun nonetheless. And one of the things you mentioned there that I had a question about was how underwriters are chosen and why they're chosen. And I think a common question or a common thing that people have at the front of their mind is, how can I get the best deal? I know out here in Ontario, specifically for something like auto insurance that doesn't have a monopoly tied to it, people always chat. Who does your insurance? What are you paying? Where can I get a good deal? Is there such thing as a discount brokerage or a place where you're going to get like rock bottom insurance? Or do you think that it falls within 5% between most underwriters and insurance brokers when they're going to the market to get a quote for you?
So let's clear up a few types of professionals in the insurance industry. Whenever you're going to purchase an insurance policy, you are communicating with a broker. Now, just because it's a broker doesn't necessarily mean that they don't have a direct relationship with an insurance company that's providing the coverage, but the broker themselves that's going to be seeking coverage and placing coverage for you typically has relationships with various insurance companies that they will shop your risk to and place the coverage through one that has good rates, good coverage, and everything that you're looking for in your insurance policy. And any competent broker will know where to shop different types of risks, which insurers have good rates on different policies, which insurance companies prefer different risks and have a good history insuring those risks, for example. But in terms of where to get the best coverage, like I said, if it's a competent broker, they'll know where to go, and they will at least shop a minimum of 3 different markets to compete for a quote for your business or your risk, even if it's outside of contracting. With netsurance.ca, on the contractors platform, we've partnered with an underwriter that dove deep into different types of contracting businesses, checked industry rates, matched or beat industry rates that were the standard, and made it digital. So our contractor platform is actually offered through, at this point, September 2019, is offered through a single underwriter, Gore Mutual Insurance Company. They're a large or small on insurance side of things, but they're a Canadian insurer. They're nationwide. They have a good claims history. They've been around a long time, but they actually they did the shopping prior to setting rates and updating rates year after year. They implement all of these rates into a digital platform, and that's how you're able on the website to get an instant quote for your different industry contractors coverage. And like I had mentioned before, I know on the electricians and landscaping industry side, the rates are very, very competitive, and I've rarely seen anybody able to find better rates or coverage elsewhere. So I think, when you're looking for a deal for insurance coverage, just do a bit of your own due diligence, shop around a little bit. But at the end of the day, if you're trusting your broker or the one that you're purchasing the coverage off of, if you feel confident that they have your best interests in mind, they will find you a good form of coverage at a good price. So I think it comes down to that. Just have faith in your broker. And like I had mentioned, with the digital product we offer, the rates and coverage are really competitive. So at least I'd recommend, if contractors that are starting out a new business, or even if you're an established business for the first few years and you have revenues under $1 million, let's say, definitely check out netsurance.ca and go to your business class under contractor insurance and just fill out the online app, and you'll get a price right there in the web browser. There's a few minor points that could rend your business not able to provide an instant quote, but we pick that up and market it traditionally. Should that happen, but yeah, even if you're going to a friend for a quote, just compare it online, and you can even show your broker that's a friend, here's what the digital platform on Netsurance provided me in terms of pricing. What do you think? That's something that's nice about the ability to obtain the instant rates in a web browser here. So
yeah, and I think your new website is now live, is it not?
Yeah, we had a new version of the site go live last weekend, but
and it looks great. I mean, there's just a ton of information on there for anybody that wants information. As you mentioned, a quote, I would highly recommend just going to check it out, because this there is online insurance brokerages of all sorts that are starting to pop up, but this is definitely not like anything you've seen before. And it is specific to contracting in a lot of ways, but there is, what other things do you offer on there? Let's jump into Netsurance for a minute and just give us a quick overview of what people can find besides contracting on there.
Yeah, sure. So as per last episode, all of the different types of bonds we offer, both on the contract and commercial side of bonding, wide variety of surety products that you can purchase. So pretty much anything that you can think of in Canada. And again, it's important to note at this point for any international listeners potentially that at this point it is netsurance.ca, and we're only offering coverage within Canada at this point. So, but the other forms of coverage: home, condo, renters or tenants, boat or pleasure craft, off-road vehicles like dirt bikes, ATVs, dune buggies, various types of business coverage from commercial general liability, professional liability, directors and officers coverage, D&O, that's also called. Nonprofit businesses, we have the contractor package, and within that, there's various forms of industries that we focus on and even have pages for that are relevant to that specific type of industry, like landscapers, electricians, HVAC contractors, plumbers, roofers, various type of contractors. So check that out for sure. And then for it's kind of one-off policies, we do event insurance, which is like often a daily policy. So for weddings and things like that. And a lot of these products are just offered digitally, which we're happy to help if you have questions on the site there. But a lot of them are self-serve policies, so you can do the research yourself on the site. Click get a quote or quote and buy now. It'll walk you through the application process. You can see a quote, and if you like it, then you can proceed with coverage. But the hole-in-one coverage that we mentioned, course of construction, and we're even getting into esports and gaming specific coverage. So that's a new one that we're looking into now, just because it's started to gain quite a bit of traction, and nobody really in the industry yet has hopped on board to try to implement products that would be specific to esports.
Love it. Well, I'm super proud of you, man. You've put in a ton of work, and guys, go check it out. There's so much value that you can get there. Is there anything else that you want to talk about related to construction insurance? And if not, I have some rapid fire questions that I'd like to throw your way.
Nope. I think that we've touched on everything that we need to in this session. Maybe someday in the future we'll do another podcast on insurance again, or bonding again, or just general contractors risk mitigation, so that business owners of different types can really get to know the risks that they face and make sure that they're avoiding them as much as possible and purchasing any policies that they can to mitigate the risk as much as possible. So
cool. Well, let's leave it there for today. I'm sure we will pick it up again. I'm not going anywhere, and neither are you. So you're going to grow. And as this thing grows, I'm sure we'll have questions and maybe even insurance tips of the month. We could think of something like that, but we can have that chat offline. So let me jump into something that I didn't have available last time we chatted. It's a small list of questions that I've compiled. I know you personally. I've known you my whole life, so I have a pretty good idea of the answers, but I think some of them can be fun. So I'm gonna reword the first question differently, because the question I used to ask people was how much coffee do you consume on a daily basis, and I've had people say, "Well, I don't drink coffee," or whatever. They have a left field answer. So I'm going to ask you: do you caffeinate yourself? And if you do, what is your favorite method of caffeination? Because
so it's funny, till about 3 years ago, I'd say, I actually didn't consume any caffeine. And I hadn't for a long time. Like maybe I used to take pre-workouts with a decent amount of caffeine when I was in my teens and playing sports a lot and things like that. Then I didn't consume caffeine for a long time. About 3 years ago, I started drinking coffees, and these days I probably have 2 a day on average, 2 coffees a day, one in the morning and one in the afternoon. And, sometimes I get on the Red Bull train too, depending on how I'm feeling on that day. But yeah, caffeine's become a part of my life recently. So that's my go-to.
Awesome. Okay, second question. What is one system, tool, or process that has had minimal investment of time and money to implement, but proven to be super integral for your life or your business? So something that has taken you literally no time and no money to get going, but has just been, let's say, has had the most upside in your life or in your business, if something comes to mind.
The first thing that came to mind, and if I sit here and think about it, I might come up with some other systems or processes, but the first thing that came to mind is actually G Suite or Google Suite. It was very easy to implement. It helps with security, hosting, email. Google Suite, for anybody that doesn't know G Suite. But that was, for my business, definitely a awesome system that was implemented. So yeah.
Okay, so this may kind of tie directly into the third question, but is there one piece of technology you can't live without? And let's not say cell phone, because nobody can live without their cell phone.
One piece of technology that I can't live without. For me, yeah, not cell phone, but for me, it's my computer. I need like a pretty hardcore, like I need a nice computer.
I'm going to give people a quick lens into Scott here. Scott has a tower for his TV. He has a Surface Book Pro laptop, and he has the craziest gaming computer that he runs his business and his gaming off of, because he's quite the gamer, hence the esports insurance. But yeah, I could definitely see that being something you could live without.
My setup here is pretty cool too, that I have with the tower at home. It's one of the standing/sitting desks that goes up and down. And then I have 3 monitors, 2 side by side, and then 1 up top. So if anybody can, that's another system that I'd highly recommend to people. When you're on the computer, have at least 2 monitors. It's so helpful. You can't do it on a laptop, I know, but just for workflows and all types of stuff, having multiple monitors is awesome.
Perfect. So the next 2, I feel that I know you well enough that they may not pertain to you, because you don't read that many books, do you?
No, I read online a lot. I'm
That's
always
true.
reading a screen, but in terms of books, yeah, I to be honest, I can't recall the last time that I was reading not on a screen. I don't know if that's a good thing or not.
Well, let's put it this way. I've seen your work ethic and all the things you've been able to achieve throughout your career, and that doesn't come without research. So I think that you're more of a researcher, a web-based researcher, than you are a motivational or business book consumer.
Yeah, I think that's a fair point. But I have been reading some books recently. If that was the question, what books have I been reading?
Top it would typically be like the top 1 to 3 books you would recommend. But what are you reading right now? Just get into that for a sec.
Sure. So Ingo Swann. Let me make sure that I'm spelling his name here correctly. Ingo, last name Swann. This guy is so interesting. He has a whole a variety of books that he's written. He was part of a government psi research op about quite a while ago now, and he's actually passed away. But it's basically gives insights into Ingo Swann's life, who's, for lack of a better term, and there's a bunch of things attached to this term that might not accurately describe who he is, but he is a psychic, basically. and he worked for the military, and he's written books, and they're very interesting.
Yeah, that would definitely be some book material that I could see you consuming. Anything related to psychic capabilities, psychedelic drugs.
It's just fringe science. That's what interests me. Fringe science.
Yeah,
that's what I call it anyway.
Scott can talk anybody's ear off about remote viewing or all sorts of other stuff, and that's definitely another conversation that we could maybe have. We may have another project in the works coming up for something like that, but we'll save that for another time. Do you have any quotes that have come into your life that you seem to refer back to at all? Is there any quote that you've read that has struck a chord with you recently, or one that you may think about from time to time, and it could be from somebody like this Swan character, or just anything in general?
I don't know about specific quotes, but I just try to enjoy whatever you're doing.
That ties right into the last question I was going to ask you. What's one piece of advice or one thing that you would like to leave behind for anybody that picks this up? It doesn't have to be related to insurance, just something that you'd like to leave behind for people to think about.
Yeah, you're right. It does tie into that point. Enjoy what you're doing. If you get a lot of people like to say they wake up, oh, I hate going to work in the morning. I hate to wake up early and go to work, or I wish I was doing something else, or something along those lines. But just make sure that you're doing something that you enjoy. And a lot of the time that just comes with the mind state that you're in. You could potentially make anything that you're doing enjoyable. What you're putting out is what you're going to get back from it. So if you wake up every day and make the most of your day when you're going to work and everything, I think that's the best way to live. So do whatever you're doing, make it fun and work hard at it, and that's it.
And I'll second that. And if I may just add one piece to that, if you work hard enough at your industry, like insurance is a pretty bone dry, boring industry in a lot of people's eyes, but you've made a career out of it. You've made a business out of it. You have been extremely successful at it, and you talk about it passionately, and it's fun. And it's one of those things that people would probably glaze over if they were thinking about career opportunities. And I think I've experienced this myself. Former entrepreneur, now I've got the podcast, but besides the podcast, I do have a job, and I can honestly say that the more work I put in, the more I get out of it, and the more I enjoy going there every day. And I think that you're absolutely right. If you approach it with the right mindset and you work hard and you build trust and relationships, and you see the payoff, that not that absolutely everything can become fun, but you'd be surprised at the rewarding feeling that you get from applying yourself, and that in turn can help you enjoy what you do. So I second that. And where can people find you? More information about Netsurance, maybe just spell the website out, and any other contact information that you'd like to leave behind.
Sure thing. Netsurance.ca is where you can find our insurance and bonding website. That's NETSURANCE.ca. And that's insurance and bonding in Canada. We're not the most active on social media currently, but slowly getting into it. So the best way to reach out at this point is directly through the website.
Perfect. Well, with all that being said, Scott, it was an awesome part two. I can't wait to get you back on again for some other things in the future. And thank you so much for the information that you've given people here. I'm sure they're going to have to take a few notes. If anybody has questions, obviously, please hit Scott up on his website. And thanks again, man. I really appreciate it.
Yeah, thank you.
Woo! Hey friends, Colin coming right back at you. I hope you enjoyed this episode and are enjoying the tools of the trade. Do you think you could help me out? Pause this right now, go back into your podcast player, leave me a 5-star review, and then share this with one person you think could benefit from it. And now that you're back, I highly recommend checking out the detailed show notes on each one of my guests over at toolspodcast.com. And while you're there, join in on the conversation on your favorite episode, follow me on social media, and sign up for the newsletter. Much love to all of you guys for the support in my journey. We are construction. And don't forget, there is no proof that life is meant to be taken seriously.